Good morning, everybody. Good afternoon, depending on where you are.
Good morning. Good morning.
Good morning.
We're recording this. Everybody will get a transcript in the event anybody wants this. We'll give it a couple minutes and then we will get going.
Good morning, Jason.
Dude, what are you doing on the call? You're a freaking top 1% LO. I thought maybe I should have you do the call.
I'm not going to be showing my video face, so.
Oh, you're going to want to show your face because we'll share the good news, and that is everybody that goes on camera gets an 1/8 of a point off their next FHA, VA, or non-QM transaction.
Yeah.
Good to see you, Chris. You
Good to see
working?
you. Hi,
You
everybody.
working today?
Today I'm off from the other job. Today's all this today. That's why I have to make a phone call in a minute, so I might be on mute.
Okay, awesome.
But
Chris,
I want this training. I want to hear it.
Chris keeps our streets safe, so thank you for your service.
Welcome.
All right, we'll give it a couple minutes and then we'll jump into the options here, guys. In the meantime, anybody have any questions? Anything they want to talk about? Anything mortgage related? All right, we need somebody that's going to be a little bit more lively today. Elizabeth, you always have good questions. Are you going to be the one we have to pick on to keep things moving?
Maybe.
All right.
How was your trip?
My trip was absolutely amazing. We spent 2 weeks in Italy and just got back last Friday evening.
Oh, cool.
This was the first time in my 33-year career that I took 2 consecutive weeks off, and it was an absolute game changer. A week you kind of recharge, but 2 weeks it gives you a different level of kind of peace and relaxation.
Oh, that's awesome.
Yes.
Hey, Jace.
Yes.
Real quick, just because I'm going to truthfully be off and on. What's this covering? Is this going to cover the MD, or is this covering all down payment assistance, 100% financing, first and seconds?
It's going to cover 100% financing. We're actually going to include just a quick blurb on the MD program as well. But I know you've got to jump on and off. So for everybody's benefit, we also will be recording this. We are recording this. And everyone that tunes in will get a copy of the recording. So if there's something you miss, you want to go back and rewatch it, you can. If you want to just give us a call, myself, Dylan, and Todd will all be in the office this afternoon. We'll be happy to jump on and provide any clarification on anything that we touched on that you would like a little bit more detail on.
Sounds awesome. I love it.
Yes. Okay. Anything you guys want to touch on? It's 11:04. We're going to get started with the call. Before we dive in, anybody, and it's an informal. Let me just kind of set the ground rules. We've started hosting these open trainings once or twice a month. We have found that there is a tremendous benefit for this. Normally, we do trainings for a particular company. In this case, we just blast it out to everybody. Anyone that wants to jump in can jump in. If you go on camera, we do give you that 1/8 of a point improvement on any transaction you want, FHA, VA, or non-QM. But we want you to benefit from this. There could be a lot of information. We want to make sure it is something that is going to really help you and help you grow your business. So if you have a question, unmute yourself and ask. I don't even have the chat open. I probably should. Dylan and Todd, and I'll introduce them momentarily with my team, jump into the chat. But literally, if we're touching on something and you have a question, just unmute yourself and say, hey, what about this? You don't have to raise your hand. You don't, this is one of those where it's more like an informal family get together than, a structured training session where you got to follow all the rules. So we're going to dive in. We're going to get started. My name is Jason Twiford. I am your account executive with Orion Lending. On the call with us, I have got two guys on my team, Dylan Johnson and Todd Pierce. Say hi, guys.
Hello.
There we go. What we're going to dive into today and just to give you a quick overview on what it is. We're going to talk a little bit about, the benefits, our background, the benefits of partnering with Orion. And we're really going to focus on 100% financing options today. And that's going to include 4 programs. It's going to include VA, USDA, our new MD program, which offers 100% financing with loan amounts up to $2 million. And we're going to wrap it up with down payment assistance. And we're going to try to limit this to 1 hour. If it goes over, we're okay with it, but we want to be respectful of your time. If you need to drop off, if you need to mute yourself, feel free to. We are recording this call. Because you have registered, you will get a copy of the recording. So, like I said, if you have any questions, jump in. But like I said, my name is Jason Twiford. We've got Dylan and Todd on the call. They both work with me on my team. You can reach out to any one of us for anything you need on any files, questions, or scenarios. We're happy to jump in and help. My background, I've been doing wholesale lending for 33 years. I'm nationally ranked by the Scotsman's Guide. We have got our own operations team at Orion. So we've got dedicated underwriting. For those of you that partner with us and do business with us, you may even have your own designated assigned underwriter. Chris is an exceptional partner. He's a very humble guy. He's one of the top 1% loan officers producing at Orion. He's got all of his business going to the same underwriter. If you want to get set up like that, start sending us loans. We will give you the resources you need to be successful and to be able to grow your business. We'll touch on some of the benefits to the partnership that you have with Orion. And like I said, ask any questions, and then we're going to dive right into the programs, give you some pricing, talk about how to sell these products, because we have some exceptional opportunities for you guys. As a reminder, anybody that's on camera does get that 1/8 of a point improvement on their government or non-QM loans. Dylan is responsible for keeping this list. If you went on camera and he says you weren't there, call me. He will be in trouble. You're all good. But some of the benefits, something unique about Orion, we do give you the opportunity to use lender credit to pay your compensation on a borrower-paid transaction. That is unique. It is not something readily available in the marketplace. It is a very aggressive interpretation of the Dodd-Frank. If you don't understand the impact of that, give me a call and I'll be happy to walk you through it. But that gives you an added level of flexibility with how you price your deals that will help you earn more business and close more transactions than when you send loans to other lenders. That is huge. We have got exceptional technology. We are rolling out a whole new LOS. The portal is going to look the same as it has, but it is going to have added functionality for those of you that work with this and you're tired of seeing the little thing spin on your screen like I am. This is going to be lightning fast. I know Chris does a fair amount of business with us. He's a good producer, but he's smirking because he knows how painful it is to watch Saturn's ring spin on your computer screen. So we do have a new LOS. It's already being piloted. That is a benefit that's going to come out in the next few weeks. We've got a marketing library that has 200+ flyers available in English and Spanish, fully customizable, that you can use to market a lot of all of the programs that we're going to touch on today. So we've got some exceptional opportunities for you, but to keep us on track time-wise, we're going to jump right into it. We're going to start with VA. We're going to go to USDA, then the doctor program, and then DPA. Ask questions. This isn't for us to sit up here and talk and hear our own voices. This is for us to help you grow your business. So we really want to dive into what is pertinent to you in your business. VA, I'm going to tell you. Anybody here do a lot of VA business? Anybody?
Just that last one. That's it.
Okay. We do things unique, and that is we offer everything that VA gives us access to. Most lenders do not. So if I was to ask you who is eligible to go on a VA loan, anybody want to answer that question?
Oh, that's right. Just to affect the veteran and the wife only?
And that is the answer that we get 99% of the time. Veteran and spouse. And Chris, I built you up to be this rock star. And the reality is that is not correct. Veterans, we allow co-signers. So let's just talk about VA and how exciting this program is. I think it's the best product available in the marketplace, quite frankly. Pricing is exceptional. Guidelines are aggressive. There is no restriction on DTI. We've seen DTIs push through. Jazzarito, what's up, my man? You just locked in an 1/8 of a point off your next deal. VA is awesome. 100% financing, no mortgage insurance. If your veteran is 10% or more disabled, they're exempt from the funding fee, which is VA's version of an upfront mortgage insurance. We go down to 580 credit score. We also have a no score option available. We'll do manual underwrites on VA down to a 580. But here's where it gets exciting. VA at 100% financing has no monthly mortgage insurance. VA has no max on the DTI. We've seen AUS approval with DTI into the high 70s and low 80% range. We will fund that transaction. We have no overlay on the DTI with VA, and we have no price adjustment when you have high DTI. If you're familiar with VA, you might see on an active duty that there is BAS and BAH, which is a basic allowance for subsidies or housing. That is actually income to the veteran that can be used to qualify, and it is non-taxable, so we gross that up by 25%. If you've got a veteran that is receiving any form of disability income, it's automatically grossed up by 25% and used to qualify. We provide 100% financing up to $2.5 million, and we have made exceptions to take that well over $3 million. And here's where it gets really exciting. Okay, we are one of the few, if not only, lenders that will let you charge more than 1% on a borrower-paid transaction. So if you are familiar with VA, there are two general misconceptions. Number one is, as Chris took the sword for us and said, VA, you can only have veteran and spouse, and you can't charge more than 1% on a VA borrower-paid transaction. We give you the ability to break both of those rules. So number one, we allow you to charge more than 1% on VA borrower paid. I just have to Rebecca, question. Unmute yourself, ask away. Great to see you. Thanks for going on camera. Thanks for joining the call, and congrats on getting your NMLS.
Oh, thank you so much. I was trying to figure out how to unmute, but so I didn't want to interrupt you, but I do have a VA client who is in the process of the disability, and they want to buy a house. So they said, can I buy it now and then get a refund on the funding fee later? And I said I wasn't sure that could be done if their loan already closed. So I'm just wondering, if they bought now, would they be able to refund it later? Or once they buy, that's it, and they got that finance?
I'm going to be honest. It's a very sticky process, because if they say they have a pending disability claim, we're going to put things on hold until their disability claim is finalized, because there is not a clear path to get their funding fee refunded.
Okay.
So I would say I wouldn't want to overpromise and underdeliver.
Okay.
So from that perspective, Shelly Kirk on the call. Hello, Shelly.
I have a question.
Okay, I've known Shelly and I have worked together for, without dating ourselves and making us sound really old, probably 27 years.
Yeah.
Wow.
Yeah. Something like that.
So, Rebecca, to get back to your question, it's a tough situation, because it's not black and white. It's not like, oh, you've got it now, here, you call this number and you get the refund. VA is going to want to fight about it if they say they've got a pending disability. So they have to write a letter that says, do I have a pending disability claim? If they say no, then VA is going to push back and say, you weren't honest. But if they want to buy a house, they can't say yes, or they're not going to be able to buy. So it's really kind of sticky, to be honest. But I have a couple suggestions. I can shoot you a call. I'll call you after the training.
Okay, thank you.
You're welcome, and keep the questions coming. Shelly, you have a question.
Yeah. So that, Chris just said that a husband and wife, if you add other people that are not husband and wife, then don't you have to put down more money? It's not 100%, right?
Yep. Yes.
Okay.
But the
So it's
misconception is it is husband and wife only. The reality is we can use veteran and spouse or any non-borrowing, non-occupant cosigner. So you could, most common is, well, I want to put the fiance on, and everyone else is going to tell you no. So you do have to come in with 12.5% if you bring in someone that is not the spouse. So
Okay.
is this going to happen on a consistent basis? No. But what this is one of those talking points where you get to sound really, really smart, where everyone is going to say it's veteran and spouse only. And you can say, oh, no, actually, you can bring in anyone else as a co-signer for VA. And I've got a lending partner that will do this, but it does require 12.5% down. And if they say, why 12.5%? That's because that's kind of a random number. VA guarantees 25% of the loan. It's kind of like mortgage insurance, right? They guarantee the top 25% of that note. If you bring in somebody else that is not a veteran or the spouse, VA doesn't insure their half of it. So that's why they come in with 12.5%, which is half of the 25% VA guarantee. Now, that being said, we probably close 1 or 2 of these a month where somebody's just planning on coming in with the larger down payment. They're selling a property, but they want, you know, the new fiance on the loan, any number of reasons. You would be surprised how often we actually close these transactions, even though it does require an additional down payment.
So Jason, I have a question.
Yes.
So I just want to make sure I heard it right. If they get paid the housing expense, we can use that as income or no?
Yes, you can.
Okay.
And because it's their housing allowance, it's non-taxable from the government. We gross it up by 25%. So you can use what is called joint entitlement, which is where you've got 2 veterans coming in. They're still eligible for 100%. We've had that come up where you've got, you know, 2 brothers that are both veterans or both active duty that want to buy a house together. They're eligible for 100% financing with both of them going on the loan, even though they're not a married couple. You can use non-occupant co-signers, as we've talked about with Chris and Shelley, that allows you to go 87.5%, bringing someone in, and we don't care if it's fiance that's going to occupy or mom and dad that live in a different state as non-occupant co-signers. All of those are acceptable. We allow you to use rental income. Now, if it's a rental property, VA requires a 2-year history, but if they're buying units, the common misconception is that you can't use rental income on the additional units as qualifying income. We have a workaround on that. Multiple VA loans is acceptable. That is another common misconception. I've talked to countless loan officers that say, you know, your veteran was stationed in Mississippi, they bought a home, they have a VA loan on it, they were transferred out to San Diego, they want to buy another property and use VA financing. We absolutely allow that. There's a worksheet that we put together. It's based on the amount of entitlement that was allocated to the other property. But we've actually closed a 2nd, 3rd, and even a 4th VA loan if they have sufficient entitlement. So make sure that if you've got a VA transaction, you want to reach out and partner with experts that really do understand how VA works and how we can help you with that. If you're not familiar with property tax exemptions, if you have veterans that are 100% disabled, they are eligible for property tax, either exemptions or discounts. For example, in California, which is where we're located, I'm most familiar with that. If you've got a veteran that's 100% disabled, they get up to $162,000 reduction in their property tax base amount. If they're a low to moderate income veteran that is 100% disabled, they're eligible for up to a $273,000 reduction in their taxes. You know, a lot of states are even more aggressive. Texas, for example, if you've got a 100% disabled veteran, their property taxes are waived. So make sure that as you look at the certificate, and if we see one that's 100% disabled, you can bet yourself we're going to call and say, hey, we noticed this. Let's make sure we're addressing this. And we want to help you partner with the veteran. It's just anything you can do to help a veteran, it's always a win. And veterans are loyal. If you tap into that marketplace, you've got a fantastic client. Dylan, if you could please just pull up some VA pricing. I'm going to give you an example of it. Our VA pricing is exceptional. We are very competitive on VA, FHA. We're competitive across the board, but government pricing is exceptional with us. This was a scenario run, 720 credit score, 50% DTI, $700,000 sales price at 100% financing. And Dylan, you're going to showcase my age. I had a client that called me, and I like to give you guys real world examples. Had a client that called me a day ago and said, I can win a deal, but I've got to be at a 5.99 rate, and I have to go borrower paid, and I don't want to be limited to the 1%. And I said, no problem. At 5.99, I've got a 1.72 lender credit. You could charge up to 1.72. And she was absolutely amazed, uploaded the file, pre-locked it. We've got it moving into underwriting. That was a deal that she had tried to send to another lender. They said, we can't help you. You can't go lender paid. You can't do the deal. So when it comes to doing VA, Dylan, thank you. But I mean, what you'll see here, guys, even if you're at a 2.75 comp plan, you're going to be at pricing at 6.25 or less. If you're on a more modest compensation plan, I mean, even with rates moving up, pricing is still going to be under 6%. You're going to be in the fives. We're experts at VA IRRRLs. We can help you when the rates drop to be able to get this client to lower interest rate. But in any event, this is a product, this is a program where we can absolutely help you. I hope we have shed some light on what additional options are available. In addition to that, we also do VA's version of a spot approval. But the difference is, as we work on that, we get the entire complex approved, unlike FHA that does a single unit approval. Okay, Dylan, go ahead and stop sharing that screen. At this point, we've kind of wrapped up the VA in the essence of time. If you have questions on it, feel free to reach out and ask. Todd, I'm going to turn it over to you. Todd has got almost 30 years of experience in the mortgage industry. He's got a lot of experience doing USDA. I'm going to have him walk you through the USDA program over a couple minutes. Then we'll jump into the MD program and again, wrap it up. So Todd, take over.
Absolutely. Thank you very much. Always appreciate listening about what we can do here and spend some time. USDA is a product that I feel is one of the most underserved segments of our industry that we all have access to, and incredibly is one of the best acquisition loans out there for your borrowers. The limitation that we all know with the USDA is, the accessibility of the programs.
Todd, you froze. Okay, Todd froze. I'll jump in and then he can pick up where we left off. So he's pulling up something on the matrix. USDA is a really overlooked product. I mean, I'm in Southern California. Even in Southern California, we have a lot of USDA eligible areas. USDA is rural housing. Borrower and property must both qualify. So very specifically, you've got to punch in an address first and foremost to see if a property is in a specific geographic area that would be eligible for USDA. What's unique about USDA, no limitation on acreage, although it can't be an income producing like farm property. It offers 100% financing for purchase and rate and term refis. Minimum credit score for this program is 620, but it does provide some relief. It's similar to FHA in the sense that it's a government insured loan, but the upfront fee is only 1% and the monthly fee is 0.35. Product is available for SFR PUD, condo, manufactured, single and double wide. Borrowers can own an SFR as long as there is some family necessity that would warrant the purchase of a new home. We do manual underwrites, but USDA is a little more restrictive. Generally, DTI needs to be somewhere mid-30s, think 34 over 44. Todd, you're back. I picked up because you froze. Unmute yourself and we'll let you jump right back in.
Yeah, my whole team's crashed, guys. I'm really sorry about that. I don't know what happened, but did you continue on with USDA there? Is that what you did?
I did.
Okay,
Go
so again, folks, USDA, one of the biggest underserved segments of our business here. And, I do understand that there's some limitations in both the borrower eligibility and properties, but, encouraging your borrowers to shop in these areas can be a huge boon. A couple of the things to note about USDA loans that does differ from a lot of the other channels that we're used to. Income. I mean, to be honest with you, we're all used to FHA and the historical things that we're required to prove. USDA has always weighted projected income for the next 12 months. The idea that, on FHA now, a lot of times we're looking to calculate income off of a new raise if we can possibly do that. All these tenets are always been built into USDA. They're always been looking at what is the projected income for the next 12 months, not quite based so much on the historic. So it's always been a great help in that way. In that regard, I will throw out there DTIs for most USDA transactions are looked at to be a little more refined. 3142 is 3144 is about the highest that you'll be able to get any of these GUS approvals. Manual underwriting also has the same caps. I do also find, though, that most of the borrowers in these arenas are not buying like we see on the coast. So it's a very, very usable product for the market. Another change that's came in recently that, in my opinion, it should be able to open a lot of doors is the idea that manufactured homes have been opened up greatly in the last 6 or 8 months. Historically, prior to the last year, it's only been that a manufactured home, you could only get a USDA loan if it was a brand new placement and never lived in. There'd been a pilot going on for a few years, and now this is live across the entire country, where a manufactured home that is a resale, as long as it's less than 20 years old at the time of note date, is eligible for USDA financing now. And that includes both single wides and double wides. So the thing is, the rural areas that we're talking about, there's so many of these manufactured homes that from my seat, it just really brings the market aligned with the opportunities that we're all looking for. The GUS process for the USDA loans is a process that anybody who wants to become an expert at these loans should become involved with, get on GUS, learn how to use these pre-quals. Orion Lending, been in the business for quite a long time. Orion Lending, in my opinion, is the lender I've worked with that has made it the easiest ever to be able to get yourself established onto GUS and get sponsored. I don't want to, I had some screens ready. I don't want to open them right now because my Teams is a little fragile, but we have a 2-step process on our forms page that directs you very specifically through requesting a GUS user ID and then coming back to us and supplying that, and then we'll get you sponsored to make you live to be able to run your GUS prequals. That's critical in the process of doing GUS and USDA loans, because if you're not sponsored on GUS and doing your own GUS findings and then sponsoring them to Orion, we're going to require that you allow us to pull our own credit. Now, for most of these USDA borrowers, to be honest with you, that's not as big a concern as some of our other channels of business, 720 credit score borrowers pulling new credit. So, don't let the idea of having to get on GUS prevent you from diving in and participating, because we are there to help. USDA, again, does have both property and income eligibilities with a few little caveats here and there. Our guidelines have links directly to those pages that will allow you to ascertain qualification both of an address and an income figure. The USDA loan differs from the VA loan. VA loan, great 100% loan. You can get that funding fee exempted and stuff. USDA may have a little bit of a funding fee, may have a little bit of a monthly, but pricing on the USDA loans are only 10 basis points off of what you just saw on those VA loans. That 5.49 is a rate that's paying lender credit today with the USDA loan. And so it really does put you guys in the thick of things, both with 100% loan that a lot of people have access to, not nearly so few as people think. And again, as far as the 100% acquisition market, it's one of the best opportunities out there. So, get in there, become the expert. Let us know how we can help. And I expect everybody to go get a Gus user right now, to be honest with you. Questions?
Shelley,
Do you have to get on Gus to find out if the property is eligible? How do you know?
No. And again, I had screens all set up. I will actually try it again here.
we've got a quick link where you
Yeah.
literally click
Type
a
in the
hyperlink.
address.
We can send you the link if Todd can pull it up. But all you do is type in the address of the subject property, and it will tell you immediately if it is eligible or ineligible.
Okay. That's great.
So it's pretty slick. Like, for example, you're taking your client out to 29 Palms. If you just typed in 29 Palms, California and said eligibility, in fact, let's do that. Todd, just type in 29 Palms, California. And it's probably going to come back and identify the entire city as being eligible for USDA. And as Todd pulls that up, we'll come back to it, Shelley.
Okay.
Like I said, in the essence of time, we're going to transition over to the doctor program. But this is as simple as the USDA lookup tool is. Well, here, he's got it.
Quick question. What is it? A Gus? 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 What does it
GUS,
stand
it's
for?
Government Underwriting System. What GUS
Okay.
is, for those of you that, most people have never done a USDA loan. Like when I say who does a lot of VA, rarely do people raise their hand. When I say who does USDA, that number is significantly lower. But Shelley, look at this. We typed in 29 Palms. It identifies the entire area as being USDA eligible.
Okay.
So you would know that going out there and showing property, at least that is something that's on the menu. So
Right.
GUS is the Government Underwriting System. It is USDA's version of DU or LP.
Okay.
But it's not as readily available. So you've got to select something that is, so you've got to basically get set up to run it directly through USDA.
Okay.
But as Todd pulls up some additional income eligibility, we'll let him come back to that. We're going to talk about the MD program. This is a new product, new doctor program. We rolled it out a couple of months ago. It's new in the marketplace. It's been a huge void for a long time. Prior to having this, I would probably get 2 to 3 calls a week on, do you have a doctor program? And it's very refreshing to be able to say, yes, we do at this point. And I will tell you, you roll out a new product, you don't know what to expect. You don't know if we're actually going to do some business on this. Is it something that sounds great, where there's really not a great practical application? Or are we really going to generate volume on this program? And I will tell you with absolute certainty from personal experience, we are generating volume on this program. It is exceptional. 100% financing to $2 million. There is no mortgage insurance on this program. The minimum credit score is 680. Available to medical professionals, and we can identify who those specific professionals are. And you have the ability to potentially waive all student loan payments for your clients. If you were going to do some marketing on this program and you shoot a quick Instagram reel that says, hey, doctors, I've got a product that goes to $2 million at 100% financing with no mortgage insurance, that little blurb right there by itself will get your phone to ring. Some more specifics on the product. It is available to medical doctors. And the reason we include this, you get a lot of interest from nurses, nurse practitioners, other medical professionals that are not specifically eligible for this medical doctor program that still want 100% financing. It is an exceptional product to market so it's available to MDs, dentists, DDS. It's available to DMD, ODs, psychiatrists with medical psychiatrists that can write prescriptions. Think of it this way. If they can write prescriptions or fill prescriptions, they're probably eligible for the program. Pharmacists, even veterinarians, podiatrists. The only designation that is not a medical doctor that is eligible is a CRNA. CRNA is an anesthesiologist. So even though we say this, we consistently get questions. Well, I've got a physician's assistant. Are they eligible? No. But Here's what we have as far as jumbo product. Here's what we have as far as 100% financing. We have some exceptional alternatives for you. Shelley, did you have another question? Okay. All right. Primary residence, single family residence only, and that means condos, PUD, townhome, any one unit property. You just can't buy 4 units using this program. Minimum LTV. Now we don't deal with maximum, minimum. The minimum LTV is 90.01%. So again, this product, and I'll tell you who is perfectly suited for this program. Residents, new doctors, right? Because you can't put 10% or more down. But if you've got a doctor who's been a seasoned doctor, high income earner for years, they may be intrigued about this medical doctor program because they all have egos and they think they get the doctor program. But the reality is they don't need the doctor program. I've got exceptional jumbo pricing if they want to put 20 or 25 or 30% down. This is a program that's designed for doctors who have not had years of high income earning. Anyone that's in a residency or fellowship program that has student loans on their credit report that are in deferment or forbearance, we will omit the payment on student loans entirely. We have had clients that have come in where we have omitted student loans when they had $300,000 in student loan payments that would have probably blown up any other transaction. DTIs on this program will go up to 45 to 50%. Projected income. So this is where we really capture those residents and doctors that are in a fellowship program. Now, that's a doctor that's completed medical school. They're working in the hospital. And when you're in your residency and your fellowship, they may be getting paid $6,000 or $7,000 a month, $8,000 a month, which is not a terrible income, but that's not what a doctor should be earning. This is where they're doing their specialty. And as they get close to ending that residency or fellowship, they're signing contracts. It's not atypical for us to see a doctor that's currently making $5,000 a month that's got a contract to start within the next several months, making $25,000 to $30,000 a month. We will use future income as long as they're going to start that position within the next 5 months. No other program available in the marketplace gives you the ability to use income that's pushed out 150 days. So when you look at who is ideally positioned for this program, it's going to be somebody that's in that residency fellowship program where I can omit student loans, I can use future income, and on top of that, the reserve requirement on this program runs from 0 to 6 months. So it doesn't have your typical large reserve requirement. So again, going back to this is a product that's designed for a doctor that's completed their schooling, completed their residency, signed a contract, and is in a position to take on a much bigger housing expense, but they don't have years of earning income where they're going to put 20 or 25% down. They don't have the reserves in place. It's an exceptional product. We're closing a lot of this business, and it is a great program for you to be able to go and market. We allow non-occupant co-signers. We allow the borrower to use gift funds. So literally, you could use gift funds on this. We offer 100% financing. You could structure it in a way where there are 0 reserves, gift funds for closing costs. We don't need $1 of the borrower's funds into the transaction to be able to close escrow. So we'd be happy to do a deeper dive with you on this program specifically. Any questions on the doctor program, but I will tell you, it is fantastic. Nope. Okay. Well, then we're going to kind of jump into the mother lode of our 100% financing options, and that is down payment assistance. I will tell you, I've been doing wholesale lending for 33 years. We've dabbled in down payment assistance, throughout my career. This is the best and most comprehensive down payment assistance platform that I have ever seen. This is a program that really works. We have got a unique, dynamic, nationwide program. So I've got 3 very distinctly different products. Instead of overwhelming you with what each one of them does, I'm just going to give you an overview of what these programs allow. And then call us and give us the information specific to your client, and we'll be happy to kind of walk you through this and figure out which program is going to be the best fit for your particular client and why. But I have got a nationwide platform of DPA that offers FHA, USDA, and conventional down payment assistance programs. Minimum credit score, I swear, Elizabeth, it looks like you're drinking a Michelob Ultra with the color and the shape of that can. So just please let me think that it's happy hour where you are, and I'm living the dream.
She might
six,
be.
Hey, there's nothing wrong with that. I was just, in a different country for 2 weeks. There more than once, my wife and I were having cocktails before 10 a.m. So there's no shame in that. 640 minimum credit score for the DPA. First-time home buyers, not required. My DPA products have no income limits. So when you look at a typical DPA program that's offered by any city, county, state, municipal agency, it is going to require several things. Number one, you have to be a first-time home buyer. Number two, there is going to be an income limit. Number three, most of these are really credit score restricted. You've got to be somewhere 660, 680, some 700. And they're all DTI restricted, where they put a cap on what your debt ratio can be. It's not atypical that you've got to be somewhere between 45 and 50%. We're in California, for example, CalHAF is going to limit your DTI to 45 to 50% pretty much across the board on their DPA programs. We follow AUS. So we break all of the normal DPA rules. Don't need to be a first-time home buyer, no income limits. We follow AUS, and we offer credit scores down to a 640. I have got several programs available, and because we don't have those first-time home buyer restrictions, we don't cap your DTI. We allow you to bring in non-occupant cosigners. We finance DPA on SFR, PUDs, condos, 2 to 4 units, and manufactured homes. We offer DPA on conforming loan amounts as well as high balance on some programs. I've got repayable as well as forgivable products, and we have got what is, to the best of my knowledge, the only nationwide grant program available, both FHA and conventional, where it is free money. There's no payback. There's no recorded second lien. We are giving them the money and the entire down payment for free at the close of escrow. These products are exceptional. And I will tell you, if you were going to put together, you want to know how to market it, and we're getting tight on time. We'll try to talk about how we market and promote this program, but it is fantastic. With respect, Chris,
Sorry,
yes, sir.
Chris. Real quick on DPAs, is it 100%? Do they have to still come with closing costs, or do we have other programs for that too?
There is no minimum requirement of the borrower's funds. Now, if the question is, do the programs cover all closing costs also? I've got product. In fact, Dylan, if you could pull up just an FHA transaction, FHA scenario, and share your screen on that.
Just a regular FHA or DPA?
No, DPA.
Yeah, okay.
So the way that we would cover closing costs, if you look at CalHAFA, for example, they give you one interest rate. If you want the program, the interest rate is, let's say, 7%. Our DPA programs come with a full rate stack, just like you would see on standard FHA or conventional pricing. So we ran a scenario at a $500,000 purchase price. We ran this as a real transaction, something that we would see. 680 credit score, 56% DTI. We're maxing out the DTI. Dylan, go back to the 3.5%. Okay, so what you're going to see here on a 680 credit score, this is a 3.5% repayable product. This will cover the entire down payment. In addition to the down payment, we give you rate options. 6.75 is paying 1.956. Okay, let's just make life simple. That's paying a 2% lender credit in addition to the 3.5% down payment. 7% is paying 2.75%. 7.25 is paying 3.2%. What that means, Chris, and to put a framework in this, we run the numbers regardless of which state you're in. This is going to vary depending on loan officer compensation and what time of year you're closing, because that's going to impact your impound account. But it takes anywhere from 4 to 5% to close escrow. That's going to cover loan officer compensation, taxes or title, escrow, and prepaids. So we're covering the entire down payment. We're still looking at needing another 5%.
Yeah.
If you lock this rate at 7.25%, we're covering 3.2% of that 5%. That would allow, and this program is available lender paid. We offer lender paid as well as borrower paid on our DPA products. You could go lender paid. If your comp plan was at 2.5%, we don't limit your compensation other than you have to pass QM. You've got to pass the Dodd-Frank requirement.
Yeah.
You could go lender paid, earn your entire 2.5%. The overage of roughly 3/4 would be applied toward closing costs. At this point, if your borrower had no money, you would need to go get a 1 to 1.5% seller credit, and you could literally close escrow on this transaction and refund the EMD back to the borrower at the close of escrow. And I will tell you, we've closed transactions in the last 30 days where we've refunded a portion of the EMD. We've refunded the entire EMD. We have had to, at the close, because we had enough additional credit, go back and add a home warranty. We've had 2 transactions where we prepaid 12 months worth of HOA dues to be able to utilize the credit. And that is literally refunding the entire EMD back to the borrower.
Beautiful.
So I'm sorry, Chris, go ahead.
No, it's beautiful. Thank you. That was awesome.
So while the program doesn't specifically offer an option to say, this is how we pay your closing costs, we do anywhere from 25 to 35 DPA transactions a month on my team, myself personally, with these guys. If you tell us what you've got to work with, we will walk you through step by step exactly what this needs to look like, which program is going to help you get there, and how we are going to structure this to be able to put the deal together to accomplish exactly what you're hoping to. Dylan, would you roll down? So this is the repayable product. It is a recorded second. There is a payment on the second. That payment is included in the DTI. So the repayable product is not for everybody. The program that I absolutely would love to put every buyer on, but it's not going to work for everyone, would be our 3.5% Elevate Grant program. This is truly a grant forgiven at the close of escrow. There is no repayment. There is no recorded second. What is the benefit of having no recorded second? You're able to streamline your client and get them out of this loan after they make 6 payments and wait 210 days. Any other DPA, not just with us, but in the marketplace that has a recorded second lien, will not subordinate. So you've got to pay it off. They're going to pay that money back one way or the other. This is amazing product. Here we've got a situation, but look at the difference. 7.25% is paying roughly 0.25% lender credit. So you lose a lot of your lender credit by going with the grant program. This program is better situated for borrowers that might have some money, $10,000 or $15,000 that they're willing to contribute. And we need to get, 2-3% seller credit. Now, I was on a call this morning helping a client structure this exact transaction. They had $25,000 in the bank. They don't have enough money for the down payment. They could probably cover closing costs. They felt that they could get a $15,000 seller credit. They're going to buy a $600,000 transaction. The way that we structured it was putting them on a grant. They're going to come out of pocket $10,000 to $15,000 with a $10,000 seller credit. Going lender paid, we're going to be able to close escrow on that transaction. And day one, it was about $21,000 in free money to that client. They will make 6 payments on this loan, wait 210 days, and we will help them facilitate a streamline. A couple of the benefits on this: when you bring that loan back to us, number one, we waive your underwriting fee, and this applies to all transactions. If you fund a loan with us and you bring it back to us to do a refi for that same client on the same property, we waive your underwriting fee. Number two, we are going to be servicing this loan. So I will be able to net your impound account. What that means is I'm going to take whatever money is sitting in the tax and insurance impound account and subtract that from the payoff. That will give your client a dollar for dollar reduction in the cash to close for your transaction. So we give you the path to be able to get your buyer into a home with an exceptional product that gives them free money. And we give you the path to get them out of that higher interest rate loan and into whatever the market rate is going to be 6 payments from now, which is probably about 8 months from now. You want to get your phone to ring? Go market free money. Who's interested in free money? Everybody. I'll give you this analogy. My wife hates to go to the grocery store. So I go to the grocery store. It's kind of like when I go to work. I get some peace and quiet from being at home. So I get a list. If her list has bread as the first thing on it, and I walk into the grocery store and I see a guy sitting at a table with a sign that says free bread, I'm going to go talk to him. I don't know what it takes to get the free bread, but I'd like to find out. Maybe it's not the bread that's on my list, but if it is, I'm gonna look into the free bread, right? My free bread table analogy. If you advertise a DPA product that gives away free money, every home buyer, whether they need down payment assistance or not, is going to be interested in what you're offering. I will absolutely guarantee you that. If you don't like doing down payment assistance, it's okay to still market this product because in our experience, 7 out of 10 people that look into down payment assistance don't actually need down payment assistance. But if I can give you a tool and a program that will get your phone to ring by advertising this product, it's worth looking into. We have got exceptional marketing on this program. I've got 200 plus flyers available on all of our programs. There is a very, very heavy concentration on down payment assistance. You want to know the best way to promote this? Put it on your Instagram, put it on your TikTok. I have literally had clients, my brokers I work with, that called me and said, I was at an open house and I tried to, talk to this prospective buyer, and they said they're getting down. I literally had somebody that called me yesterday and said, I tried to get a deal from a borrower, and they said they're getting their down payment assistance from Orion Lending. And they're like, well, we're approved with Orion. We could help you with it too. I have had loan officers that have called me and said, I've got an LE that I think is fraudulent because the way the LE reads, the borrower's getting their EMD refunded at the close of escrow, and I know that's not possible. And I said, it absolutely is. And I'm educating loan officers on how they can go promote this program. So what I will tell you with absolute certainty, think of the free bread analogy. I walk into the grocery store with the ability to pay for my own bread. If I see somebody advertising free bread, I'm going to go talk to them. There's no question about it. Offer a product that people have to call you on. Free money is the program, and this literally is free money with a plan to get them into it and an exit strategy. What else is great about this program? It's available FHA and conventional. All right, Dylan, pull up the conventional pricing. Anybody know what happened in May of 2025 that impacted FHA loans? Okay. Yeah. Okay. Dylan and Todd should raise their hand. They better know the answer to this question. But for the rest of you, that is when the federal government said we are no longer going to insure FHA loans made to non-permanent resident aliens, which effectively eliminated FHA and VA financing for all non-permanent residents. I know a lot of you on this call are in Southern California. We have a very heavy concentration of non-permanent resident aliens that are and 90% of DPA products available to you in the wholesale world is FHA based. We have got the only conventional DPA program outside of city, county, state, municipal agencies that offer this. You can go drop your TikTok that says, hey, non-permanent residents, I've got 100% financing for you, because I guarantee if they're in the housing market and they've looked into down payment assistance, they've been told by everyone they talk to that they can't have DPA. Our conventional product still accepts down payment. It does down payment assistance for non-permanent residents because we leverage both Fannie and Freddie. Our conventional DPA, you get to select which agency you want, which means if you want to go 1 year tax return, we'll go Freddie Mac. If you want to provide 1 month bank statement to cover your assets, if you have assets, we go Freddie Mac. You want to go 0.5% on student loans, we can do that. So we've got the ability to leverage both Fannie and Freddie for our DPA. Pricing is competitive on the program. Again, they need to make 6 payments, and we can help you get them out of this. Now, it's not a streamline going conventional, but you still have the ability to do 100% financing for non-permanents as well as permanent citizens, obviously. But it is an exceptional product for you to be able to market. Let's talk about how you market this program. Literally, your social media. Put it on there. I would be blasting the doctor program, the DPA product. We do it extensively on my team, and we get a tremendous response every time we do. We have sent the same DPA marketing to clients for years, and it amazes me how I'll get a call from someone and they're like, did you just roll this program out? And I said, yes, back in 2021, we've sent you marketing material on it for the last 5 years. You've probably received 400 emails on this specific product, but that's okay. You're calling now, and that's all that matters. Necessity drives what people see, right? Now they've got a client asking for DPA, so they're going to be a little bit more aware of it. Thank you, Dylan. Go ahead and drop the screen share. I have got clients, and now I'm going to get more people on camera. Let me ask you guys this. How many of you have sat at an open house in the last 4 weeks? Brian, Shelley, good job. I've got clients that are doing 2, 3, 4 deals a month consistently. Their only source of generating these leads is open houses. They go consistently. So unless you are closing so much business that you don't need any more loans in your pipeline, seriously look at open houses. I have got marketing material that is exceptional. You put together a flyer. So if Shelley says, hey, I'm going to go work with a realtor partner, or Rebecca, you work at a real estate office. If you said, hey, one of my peers over here that has a listing, I would really target listings that are a good fit for FHA product. So somebody has a listing in Rialto, San Bernardino, or the high desert, and it's priced right. Jump on that. Say, hey, Bill, I'd like to do an open house at your property. You want to do it with me? Boom. I've got open house flyers that you can co-brand with a realtor partner. Or if you do real estate and loans, you could put yourself on it with an assistant, or you can just eliminate the co-branding entirely. When you type in the address to that property or the MLS number, my flyers interface with every MLS agency in the country. It will automatically pull up the listing for that property. You can select which photos you want to put on the flyer. You can use AI to condense the text. It basically creates the flyer for you. And we have all of this available to you at no cost. We can walk you through how to use it, how to leverage it. It gives you the option for a second page. So if you're going up to a property that would be a good fit for DPA, I would put some DPA comparisons on there. It gives you the ability to do that side-by-side comparison of different loan programs. If you're going to go do an open house in an area where you're selling, $2.1 million houses, I would do a comparison of a jumbo loan with our doctor program, because that would be relevant to that specific property. But guys, and then start looking at properties, and here's another sales strategy. This actually worked. Brian wasn't the loan officer, but it worked. One of his peers, one of the LOs, brought me in to do a training at a Century 21 office. I always try to target, especially on the DPA, because seller credit is such a game changer on that program. And we've already established that we're looking at 4 to 5% to cover all loan officer compensation, title escrow, and prepaids. We were doing a training, had a bunch of realtors in the room, said, hey, has anybody got a listing that's been sitting out here for a while? A couple people raised their hand. I said, all right, where's your property? Okay, that's where it is. What's your current list price? $625. How long's it been on the market? I'll never forget. It said 43 days. I said, your seller's got to be getting a little antsy on that. He said, they are. We're going to drop the price. I said, how much are you going to drop the price? He said, we're going to drop it from $625 to $599. Instantly in my head, I said, you're giving me that 5% that I need as a price drop. This training was on a Wednesday. I said, I'll tell you what, this loan officer right here brought me in. Why don't you two do an open house at that property? And instead of you dropping the price, okay, leave the price at $625, but I'm going to take that $25,000 as a seller credit, and I'm going to pay all of their closing costs. They're not going to have to come in with any money at the close of escrow. And you guys go do an Instagram video, you tell everyone at the office, but it looks something as simple as this. Hey guys, we're doing an open house this weekend at 123 Main Street. I've got an exceptional down payment assistance program that will cover your entire down payment. I have got a motivated seller that is going to pay all of your closing costs. So come and see us this weekend, and we will show you how you can buy this house with literally no money down. Sounded good. They did it. They went and sold the property that weekend. And they said they had an amazing turnout at the open house, much better than what they would have expected. And they promoted it. And you guys want to know the craziest thing about the whole deal? Buyer didn't use down payment assistance for the product. So whether you liked it, a lot of loan officers and realtors don't like DPA. You don't have to like it, but if I can give you a program that's going to put commission dollars in your pocket, take advantage of it. Use the open house, use our marketing. That is a lot of information we just drank from a fire hose on VA, USDA, an MD program, and down payment assistance. We're right at 1 hour. I can't believe we did it, but let's open it up for any questions you guys have. It's an open forum. Anything you guys want to talk about right now.
So I had a question. Going back to the USDA, Todd said that if it's a manufactured home and it's under 20 years from the note date, it's eligible for USDA, right?
Yes.
Correct.
Now, what if that manufactured home is on leased land?
Leaseholds are okay. I mean, how many have you done conventional or FHA? Let's make, it is a little more document sensitive, but it is eligible. And if you've got a lease that's 5 years over the term of our loan, it is eligible. We haven't done one here, but it is per guidelines eligible.
It's eligible. I'm going to tell you, Elizabeth,
Yeah.
we're doing one right now that we're all cringing on for the Bureau of Indian Affairs on a lease.
That's different.
It's
That's
a nightmare.
hugely different.
I hate leaseholds.
Mm-hmm.
That's me personally. Now, will I still subject myself to the pain to do them? Absolutely.
Yeah.
But unless they're in love with that property, I would really, it's a, you know what? My wife loves Angela Johnson. It's a complicated order.
Well, I just thought I'd ask because in Southern California, everything is leased land. So, just thought I'd ask.
Yeah,
Yeah,
no, it's
I might shy away
eligible.
from Indian land, leased Indian land, but if it's a private landholder and it's leased, I mean, again, that is standard. We would do those conventional and FHA as well. It's all within guidelines.
Yep. Yep, that's available. USDA, Fannie, Freddie, FHA, VA will take leaseholds on manufactured, and all our DPA will. So we just don't like them because it is so
right.
It's just challenging. And we're not afraid of a challenge. We will get in the fight 100% of the time. It's just you've got so many other ancillary agencies that's where it becomes much more complicated. Brian. Yes, sir.
I did a VA refi last summer. The vet is disabled, so we went ahead and got the funding fee waived. They did not purchase with a VA, but I didn't know about the property tax bonus. Do you know if that would be retroactive for them if I let them know?
Well, number one, I think you create such a value add to let them know right now. And where was that property located?
Texas.
Oh, absolutely call them, because if they're 100% disabled, their property taxes, they will be exempt entirely from property taxes. Now,
no kidding.
Oh yeah, Texas is one of the best states for you for disabled veterans. California gives you a reduction. Texas waives it, and Texas property taxes are through the roof.
And that's a good point, because it was about a 10-acre property or something, and we had all this runaround because Texas gives you a farmer, rural, whatever. So they had a perimeter around what was actually the living property, and that was 1.5 acres or something. The rest of it was just, we had to prove it wasn't a working farm.
Okay.
So there were two different little things there, and I'm 99% sure we never went into the disability issue with his taxes.
Yeah, no, I doubt that they would do it retroactively, but Texas is so good to veterans, they might consider it. But it would definitely be worth calling. I know in California, for example, each county has its own form. And the process is you fill out the form, you provide the certificate of eligibility or some other form confirming 100% disability. Once you own the property, you can take it in, submit it to the county, takes them a while to process the paperwork, they approve it, and then all of a sudden your property taxes are adjusted down. Now, I know that they will retroactively go back to the date you filed the paperwork because it may take them 7 or 8 months to actually process it. But I don't know that they would go back prior to receipt of the paperwork.
Well, the key point you mentioned is just value add.
Oh,
You know,
you call
you-
them and it's like, wait a minute, this
Yeah.
guy called me back a year later to say, hey, I can help you with this. And if you Google, how do I waive my property taxes if I'm a disabled vet in Texas, that probably takes you to the form. And then, huge value add. Hey, Brian, we, wanted to reach out and make sure you're aware of this. Here's the form. I can help you complete it. You've got to take it down to the county. I think that is one of those huge wins. And I would guarantee you that almost guarantees you a referral from that client.
Appreciate it. Thank you very much, sir.
You got it, Brian. Thank you for joining the call. Okay, guys, what else did we touch on today that we can help you grow your business with? Rebecca, anything?
No, I actually just learned a lot today, so I'm
Good.
just grateful for what I know. I do have some questions later, but they're more detailed, so
Okay.
yeah. Thank you, though.
You're very welcome. Thank you for joining. Anybody else? I know we did not do that good of a job of covering every single thing you wanted to learn, so feel free to ask any questions. Okay, Dylan, you got a list of everybody that went on camera.
Yes, sir.
All right. Put everybody that hung on here this long twice. You guys get 2. You get the bonus plan. Shelly, anything else we can answer for you? Jazzarito, great seeing you.
No, I don't have any questions right now, Jay, but I learned so much. I'm gonna go back and go back through some files, go back, call some clients, especially my 29 Palms client, and see what we can work out now with this new information. So I really appreciate it. I wish I had jumped on one of these earlier, but the timing just never worked out for me. But I thoroughly, this was great for me. Thank you.
You're welcome. Thank you for joining us. Always great to see you. And we cleared your insurance. I haven't gotten back to you
Yay.
because I was on the call, but insurance is signed off.
Okay, great. Awesome. Thank you. It
Okay.
was nice to see you for the first time too, Dylan.
Yeah, great to see you, Shelly.
You
And
guys take care.
Shelly, did you notice we got Justin Azarito on the call with us too? He's in a whole different world.
I saw that. I definitely saw that. I was like, wow, is that Justin? How are you?
I'm good, Shelly. How are you doing?
I'm great. I'm great.
It's been too
Okay,
long.
Good to
guys, we don't
see
want to
you.
keep people on the call. We could have our walk down memory lane after we end the call. We would love to do that. But any other questions? Going once, going twice. All right, guys. Thank you for joining. Look for the training that's going to roll out next month. If anybody has a request for training material, or hey, how about a training on X? I want to learn more about this. We're happy to, we'll take all requests. We would love to really cater it to what would be beneficial for you guys. Okay, guys,
Thanks.
we're going to go
Thanks
ahead
so
and wrap
much
it.
for doing this, Jason.
You're welcome, Elizabeth. Thank you for joining us. I hope you're enjoying that ultra.
Oh no, so it's called Amino Energy.
Oh, you're being healthy. You're not chugging ultras at 12:09.
I wish, but I need
So
some
do
energy
I,
in my
but
life.
that's okay. Now you've intrigued me with the Amino Ultra, so I'm gonna have to go check that out.
There you go.
All right, guys, have a fantastic day.
You too.
You too. Thank you.